S&P has seemed to follow suit, follow international markets. I mean, she came down quite a bit, hit a low of 675, has bounced not back up to where we fell from, but trading at 688.26, trading a little sideways now. So I guess we could start off by saying, what do you think about this? How do you feel about that?
We're basically flat on the year, and it's a little bit surprising given the news because what happened this year, right? We started the year, we go into Venezuela and steal Maduro and his wife. Well, steal. I'm not really sure that that was exactly what happened. I think they negotiated that beforehand, but whatever. And then he was paraded through the streets of New York City, and then we have talks of getting or buying their crude oil from Venezuela, and that sort of sent certain parts of the market higher. But then at the same time, we have threats of trying to invade Greenland and do all this other stuff. But that's quickly reversed again. Oh,
That's
and I
purchase.
completely forgot.
Mhm.
Right. I completely forgot. In addition to invading Greenland, we're talking about the fact that there's a possibility of 10% tariffs on a bunch of European countries, NATO countries, who are opposing this move into Greenland for the United States. So I don't know. Politically, internationally, it seems like there's a ton of pieces moving around, but the market has had some bad days, but overall it's stayed flat. So I feel like it's showing a lot of resilience. And then on top of that, we've been having a really good earnings. Uh, this quarter's earnings have been coming out pretty strong. I think what the banks just released, and they were doing pretty well.
Yeah, Goldman had,
Uh,
I believe Goldman had record-breaking profits from their trading desk. Their shares are probably ridiculously priced. I don't have a quote up right now. I'm
let's
sure
see, GS
stupid.
918.
19, yeah.
So
Wow. Mm.
they're up 0.5% year to date. So they were at their peak this year. They were up 6.7%, and they've come down since.
Wow. I don't know when it was, but maybe 2023, early or no, not early. I guess it'll be late 2023. Goldman Sachs was like, I don't even think they were like $400. Um,
Yeah.
and it's just nuts.
Well, they're up almost 44% in the past year.
Yeah, they are.
A bank, a bank with a PE of 17.9 is up almost 50% or 44% in 1 year. That's crazy. But the other thing is, I mean, we've always known this, but how well the banks are doing is generally a sign of a strong economy. So the banks are performing well. Generally, everybody else is going to follow in suit.
Now, so okay, I'm gonna push back there a little bit because I think I agree in part, but I also recognize the mechanics of the banking industry and kind of the strategies that they can deploy. Um, the bank can make money off of a bad economy, you
Oh,
know,
well, sure. Yeah.
and it's like
Not in 2008, though, right?
not well, not in 2008. Well, some people, um,
Yeah.
but I think that especially I think you have to see where their profits are coming from. I think a lot of these banks are being propped up right now by their trading desk, and I think some of that is it has to be coming from just capitalizing on market volatility, right? Like I think across the board, trading desk numbers have been relatively good.
Well, it's been volatile, so maybe a little easier to make money recently.
Yeah.
You can buy the market or you can sell the market, and either way, I think you might make money. So
Or you can
I
make
no, I hear what you're saying on that. Here's what I just thought of, and I think it's really interesting.
Mhm.
Do you remember this time last year how every single bank? I remember reading some maybe 9 months ago.
Mhm.
Bank of America was saying that we were in a massive AI bubble and the market was going to crash 40%. And that was a normal headline. We're in an AI bubble. What's going on? And here we are. And almost the end of January of 2026, and not a whole lot of downside to be seen, and not a whole lot of negativity in the market right now. I think November, December, we sort of had some, but pretty resilient. And didn't we just hit all-time highs in the
Ooh,
S&P?
we recently, and I think this is where you and I differ a little bit because I, you know me, I I love to make a move when things are bullish, but I think at heart,
Right,
I'm a little bit of a contrarian in that if assuming the market is always trading at a premium, right, relative to what these companies are actually worth, just because
right.
participation is gonna, um, the frenzy, right? So
Participation meaning more people are owning stocks.
yeah, participation in the market,
Okay.
right? Like the free market, buying shares,
So
selling shares.
you mean like people are putting away money in
Yeah,
their 401ks, buying the
401ks, trading
S&P, and that's
accounts,
going to
right,
drive up the premium. Okay, that's yeah,
right,
okay.
right. Yeah, so you have premiums that are associated just, by virtue of that. But then so if you consider that the market is always at some sort of small bubble, I
Mhm.
think I think maybe the way I see a bubble, I see it in two different lights. I see on the one hand, I see a bubble in the way investors are thinking. And by what I mean by that is earnings, a lot of earnings disappointment comes from either guidance or actual quarterly earnings being down. And,
Right,
the reason why we buy stocks, I mean, at its core is because we think the companies are going to go up in value, right? At its
right.
core, that's what we're going through with. And so we have the premium on the investor side of people's expectations. And I think with AI, a lot of these companies they've made promises, right? Uh,
Hmm.
but then on the investor side, these expectations are ballooning to something that may not be satisfied, at least in the near term. Who's to say what happens far down the road? But I think when you have technology that your average person doesn't understand, I mean, I don't understand it, right?
Yeah,
Um, when you have this type of technology, I think you have to recognize that there will be a gap between what companies are saying, what, analysts are saying, and what people are seeing at the end of the road based on their interpretation of what's happening in the world, right?
right.
I think there are some people out there that truly, they'll understand the idea of a language model and truly believe that ChatGPT is a modern day equivalent of like the 8 ball that you shake and it's like, omniscient, all knowing,
Mm.
like so
It's like God in machine form. He knows all.
yeah, so I do
Yeah.
think that has caused a little bit of the bubble. And I would say that this kind of differs from, companies having, I mean, these companies do have crazy valuations. Uh, I don't know how much of that is unjustified, but you know, um,
Do you what companies come to your mind when you say that? What companies are super overvalued?
I think this is I think this is a hot point right here. Um,
Okay.
because I'm thinking less.
We welcome hot takes.
We welcome hot takes. I think less of specific players, specific companies, and I think more so in terms of industry. I believe
Oh,
that
really?
well, yes, because AI is ultimately propped up by industry, right? Like tech as a sector has led to all these other developments, right? Semiconductors and what powers AI. It's all part of this one feedback loop. So, you know, I think as all of these values go up, some companies will seem more overvalued than the other. But if the whole sector itself is a little blown out, then what? And AI is just my example. I'm sure this exists in other places. A good example, and this is, I think, a good example of this phenomenon, at least the way I see it, on a smaller level is kind of like when Airbnb first came out and it started picking up. And before you knew it, people instead of just renting out their homes or their vacation homes, people were taking
Right.
out loans to buy properties to have Airbnb
Yeah, right.
rentals, right? So you create this market that is feeding itself, and I think that was it wise for people to pull out second, third, and fourth mortgages for Airbnb when, like in New York, something like a change of the statutes or, a change of law is is going to make being an Airbnb host way more inconvenient than what it's worth.
Right.
So I wonder how much of that, if any, is sprinkled into AI, not only as an idea, as a technology, but as an industry and the players in it.
Do you think that this, I mean, we're both fans of NVIDIA and AMD,
Yeah,
right? But let's take NVIDIA because I think it's objectively the winner of the entire AI revolution, right? It
yeah,
touches every corner of it. You need compute in order to have AI.
right.
Now, NVIDIA's forward PE is at 26.7. Obviously, yes, I understand what you're saying with an entire sector being overvalued, but at the same time, that sector is made up of companies. So if we had 100 Palantirs in a sector and everybody's at an 100 forward price of sales, then I'd be like, okay, yeah, the entire sector's screwed. But at the same time, if you have 100 Nvidias trading at a 45 PE and actually 46 PE and a 26 forward PE, yes, there are high expectations in there, but I mean, we've been seeing this quarter after quarter, year after year over the past, what, 2 or 3 years. This is playing out exactly how they're saying. Yes, is there a possibility for failure? Absolutely. And should that be neglected in any way, shape, or form? Absolutely not. But I don't know. What do you do when there are high expectations, but at the same time it's playing out, but at the same time you also want to be cautious? I don't know. Where does your head fall in that scenario?
Yeah, no, I think that's an important thing to think about.
Well, because and just one more thing, like I think we can both say reasonably, Nvidia that's growing it. I think they grew 60+%
Yeah.
year over year
Mhm.
at a 26 PE. That's pretty reasonable.
I mean, look, I agree. That is reasonable. I think that's good. Especially
Or do
for,
you think maybe there's other, I'm sorry to interrupt, or do you think there's other parts of the tech sector that are overblown?
okay, I I'll put it like this.
Yeah.
Every kingdom that has fallen had a king, you know?
Yeah, yeah, yeah.
And that is where I'm coming from, where yeah, I'm not surprised that in this industry there are firms that are at the top that are dominating.
Mhm.
And I think the problem with this feedback loop, and maybe I'm a boomer, right? I'm not anti-AI, I'm not, right?
Well, yeah, we use it all the time.
Yeah, we use it all the time. I'm pro tech, right? But I think just to think critically about these things, right? Like not even, this is not like a position of, oh, I'm anti. I think it's the Dutch, it's the Dutch tulip bubble, like,
Mhm.
call your mom, tell her to sell the house. But I think I which came first, the chicken or the egg, right? All these companies are doing well because now the world is relying on products that they created that need components from all of these other firms that have contributed to not only the cultivation, but the the maintenance of this infrastructure that has been created, like with AI.
Right.
20 years ago, not a single one of these companies were needed, right? Arguably, right? I'm sure, but
As needed as they were
as
compared to
needed,
today. Yeah,
right?
I agree with that.
As needed in terms of the value they have today being based on what impressions, right? And what
Right.
information. So
Mhm.
with what they're doing today, it's because of this thing that has been created. So, and I don't want to sound conspiracy, right? I'm not saying it's a cabal or whatever. This is innovation, right? You create
Right.
different marketplaces of ideas and of things that you can buy. Widgets, man. It's all about widgets. So, I you know, it's like that it was going kind of wild on social media. Um like that triangle of like, Nvidia hundred billion dollar deal with OpenAI, and then OpenAI buys 10% of AMD, and then Microsoft owns 50% of Nvidia, and then like,
Yeah.
right?
You
Like
said some of those words correctly. I know what you mean.
some of them, right?
Yeah,
Right.
yeah, yeah.
And I think it's actually I prefer saying it that way because I think it signals how, even though it's all chaotic, right, in terms of how these things are connected in terms of deals, I think they're valuable, right? So I
Hmm.
do think that if you're a big player and in one space and a big player in another, and you need a lot of computing power, you need hardware, you need software, you need these things. Well, yeah, and if those things allow you in your space to push innovation further and drive
Hmm.
competition, and then people create different firms to compete because they see other avenues of value. So now these companies need more, production
Right.
to happen. So I'm not saying it's fabricated, right? But I just wonder how like ubiquitous will AI really be? Oil companies have historically, maintained value, large fluctuations based on what's happening, but
Right.
we've always needed oil in terms of, you know, um,
Right.
but at current moment, the world doesn't necessarily need AI. We're transitioning to it, but
Okay.
the world was around so much longer. Uh,
Well, the world was also around before oil, to be fair.
fair.
But
But
I understand what you're saying. We're transitioning to AI. We're not reliant
But,
on it
but
yet.
wait,
That's
let's
fair.
let's catch that thread because I actually like I appreciate that comment because
Yeah.
take your oil analogy and say, okay, well, as society progressed, uh, and once that became part of what we were doing, um, the old way of life was just not feasible. And I wonder if the same thing is true about AI. Maybe in certain areas, military applications, healthcare, maybe legal, right? Maybe, right? Your everyday person is interacting with oil in some capacity.
Right.
And my whole AI thing is, just because it is dominating and it is very popular, and it is very robust, um, will that push us to a point where it's no longer feasible to live without it? And then there's a bunch of
Mm.
questions inherent to that, right? But is it capable of that? Is it capable?
What do you think we would need in order to become a society fully reliant on AI as we are oil? Do you think that will ever come? Do you think that's even a possibility?
So
Because right now it's sort of a convenience factor, right? You get to fire some people, you get to save some time, you get to increase efficiency, but that's a luxury.
So I think it comes in two parts, right? The things that you just said are things that are at its core among the easier things to replicate. I'm not saying this as like, oh, it's easy. I can't do it,
Mm,
right? But when you go from that to, okay, how can we create engines that can have original ideas, but then how can we fact check these things? If if
yeah,
if there are original ideas that we would not be able to fathom or synthesize, then there is no way of creating, or on our level of conception, there's no way of kind of fact checking it. The only other way is to have other supercomputers doing it. And
yeah,
you get to the point of oil when our systems are only understood so far as they need to be maintained by humans. But once there's nuance that we no longer have insight to, I feel we can't go back. But until
So
that,
you think once AI becomes so smart that only AI can fix it or improve it?
well, then, because as of
Is that what
now,
you're saying? Like AI just becomes this black box
yeah,
that
well,
nobody can understand, and all we can do is we can plug in GPUs into the server rack, we can replace them when they're dead, and we can keep the lights on. But other than that,
yeah. So when we no longer have to metaphorically turn the light on, then we
Yeah.
need it. But up until then,
Interesting.
we don't because
Do you think,
well,
go ahead.
because right now, outside of certain spaces, but I don't think, I mean, I don't think governments are relying on AI, right? Um,
Right.
and you know, I know how people say, oh, well, you know, things come to public space after 50 years being in the military, you know, those things that they say.
Right. Right. Right.
But the thing is that if the government was using some version of AI 20, 30 years ago, no version of consumer products will match
Yeah.
that of the military. So it's not a fair comparison.
Right.
You like it's not when we're never I go on planes. I'm not going in stealth bombers. Like it's not a comparison
Yeah.
that's I think valuable to make. Um
Well,
so
just wait until we invade Greenland. They might call you up.
let me call me up. I mean, I don't think I've seen some videos. I don't think they're too upset about it. Okay.
Yeah, no, I think
I
we're good.
I welcome my fellow Americans. So, you know, um
Do you
maybe
think we're going to get to the point where we have robotics, AI robotics, and that's going to just be a normal thing in our streets? Obviously, we have autonomous cars, which are becoming more and more prevalent as time goes on with Tesla and Waymo.
Mhm.
But do you think there's going to be a point where, yes, right now AI is okay. I go to gemini.google.com and I type in whatever I want and I get research reports and things. But eventually, I mean, what technology do you think that could stem from this that would solidify your position that okay, there's no way we turn back?
so okay, I my impression would be to say at first, hopefully we don't get to a point, um, like we should get to a point of development where these systems are invented to be tools to us.
Mm,
But we should never be the tool in the sense of our job being only that of turning on the light. And
mm,
I think issues arise. I mean, maybe an example that I could think of on the fly is assume healthcare systems became fully dependent on AI, right?
mm.
And you know, assume that you know we have these systems in place which I don't know, like early detection things, right?
Oh,
Maybe,
okay.
maybe, maybe in terms of sifting through information that would simply take humans years to go through, right?
Mm,
And identifying patterns that we could identify, but the one large barrier there is the amount of time needed to go through that information. And I think that's where AI is super useful, right? Because we have, I mean, troves. We have so much information, and humans collectively have not been able to fully sift through all of it.
right.
Right? So I think having computers doing the digging while we're the ones that are still working with the fossils, I think is kind of what I would like to see. But I know humans made the nuke, right? So it will definitely go further than that, right?
Yeah.
We happen to create marketplaces where you kind of forget who needs who, you know?
Yeah.
Um, and I don't think that AI will be any different than that.
Mm.
So
Honestly, dude, when I have AI robots cooking my eggs, I know we're not going back.
when I go back, dude, here's the
When
thing.
when my AI when my AI wife is coming up to me and smacking me on the butt in the morning and saying, "Hey, sweetheart, made you some or Hey, sweetheart, made you some pancakes."
Bro, I mean, I would
I'm
hope,
in. I'm in. I'm down.
dude, I hope if we have it, if you can have AI, if you can have an AI wife, I would hope that she doesn't sound like that. You know, like technology's so advanced.
What if I'm into that though, Brendan? What if I like the robot voice?
I won't yuck your yum, but I'll definitely
It's like those '90s cartoons. Perfect. Perfect for me.
you know, Palantir can tell you which piece of hair fell from your head. I know we are
Yeah,
far
yeah.
from robots sounding like that. You know,
What yeah, yeah. Okay, so we talked a lot about AI infrastructure, all this build out. In summary, though,
in summary.
what do you think where do we go with the S&P? Because there are some decently high valuation on some of these companies. There are pretty high expectations. A lot of the analysts are saying that the S&P is going to end up at, I think it's 7,700 this year, so about 10% gain from where we are now.
Oh
That's pretty
wow. Yeah.
standard.
Oh wow, the S&P
Yeah.
is gonna
Whoa.
do what it's done for
Whoa.
100 years.
But no,
Stop the
no,
press.
no.
Stop the press. The S&P, are you telling me that are you telling me that 500 of the largest companies in America weighted all together in a little box is going to get 10%? Wow. Wow, those
But
analysts.
but
Those analysts.
well, nobody wants to lose their job, Brendan. So,
Fair.
uh, but yeah, you know what is interesting though? The S&P 500 rarely actually returns 10%. It's always somewhere between 15 and 30%. And then it every now and then it just has a dump of a year where it's down 15 to 25.
Well,
So it's very, very rarely in that exactly 10% average. It's very much
that's the fun thing about averages, right? Um, when you talk about your 10% annual return, yeah, you're not mentioning your 25% up years, but you're doing that so you don't have to mention your 25% down years.
yeah,
So, you
yeah,
know,
yeah,
so,
yeah, yeah, yeah.
but yeah, no,
So yeah, so with everything's going on, what are you expecting from the S&P this year? Do you think it's going to go up 10%? Do you think this is going to be a good an average up year, or do you think we're going to have a pullback? Where's your head?
I think a lot of that is dependent on factors, maybe not so intimately related with these companies. And I could be wrong for saying that, but
Mhm.
I think the world is in a precarious state given rising tensions, global conflict, trade wars every other day that end every other day.
Shout
But
out to President Trump.
shout out to Trump
Rock on.
for you know um back and forth.
Making my portfolio go like this.
Yeah,
Thanks.
yeah, it's looking like one of those hospital monitors. But so
If you're lucky,
if you're lucky, but hey, as long as it's beeping, you're still alive.
as long as
So
it's beeping.
um yeah, so I would say that the S&P, all these companies might have a great year. But if somebody gets nuked in December, S&P's going down. So I
Right.
right, and I say that, and I say that lightly. But I do think that in some way, global politics may have a larger impact on markets than normal. Because obviously
Interesting.
these things impact the market all the time. But
Well, Trump is still talking about Iran.
and he's not going to stop talking about it.
Yeah.
And I do think that, I think there are going to be buying opportunities all year. Um, but remember, and this is kind of your philosophy and my philosophy, where it's like, you know what? This is the beauty of compounding. It doesn't matter what the S&P does this year, uh, because I'll buy it this year and I'll buy it next year and I'll buy it the year after that. And I think for me, that's my theme of just finding, you know, places and things to put money in. But the S&P, historically is something you park your money in. So I would say this is that when it goes down, it's just an opportunity to buy more. Um,
Hmm.
and I don't say that in a cavalier way, like, it fell 5%, I'm going to take out a loan. But
Yeah.
it's just being prudent. Like when you invest, you invest. And if you really like something and the fundamentals match and your thesis is, well developed according to whatever metrics you use, you should be happy when it goes down because you liked it when it was much
Mm.
more. You know,
All right, Brendan, gun to your head. S&P price target for January 1st, 2027.
dude, I'm in law school. It depends. Um, price target. I mean, these things, I refuse.
Most
Look, look,
likely. What's your 51% price
I
target?
refuse to succumb to the pressures of the Republic. I'm not going to give you some arbitrary number from out of the ether just to, what the S&P is going to do? The S&P will, at its best, beat its average annual return, and at its worst, it won't. And and I think that is
Profound statement
I think it's a
from
profound
Brendan.
thing. Um, okay, but you know what? I'm gonna turn the microphone and metaphorical gun to you. What's your price target for the little S&P?
Oh, I think we're going up 16% from the start of the year.
You heard it here,
I don't
folks.
I, I don't think having triple. So here's the reason I say that.
Mhm.
Now I watch a lot of Tom Lee, and he has a lot of really interesting research, and he says that the first 5 trading days of the year, on average, determine the overall market outcome.
Have we
So
checked
it's
that?
really
Have we
interesting.
fact checked that?
I fact checked that. Yeah.
How'd you fact check that?
So how I fact checked, I looked at his research and I said that looks right. No, but he's fun strat
He
global.
sounded real convincing.
Yeah. No. I read the report that he put out though.
No, I know.
And so here's the thing: if the first 5 days end up being positive, like combined, so over the first 5 days, if the S&P 500 is up, on average, you'll have above an 18% return, and there's I believe, an above 80% win rate on that. So the important thing to take away from that video though is just the fact that the first 5 days of 2026 were actually positive. So now there is an above 80% chance that we are going to have a return of 16% or more this year. So are we going to see 3 years back to back to back, a three-peat of 20% returns? Maybe, but I don't know. I'm not really sure with especially the large expectations on companies like Micron, Nvidia, uh, Meta, Amazon. I'm not sure exactly what the catalyst would be. So I think we need some sort of a catalyst. Excuse me. I think we need some sort of a catalyst in addition to organic earnings growth to propel to that 20% or higher return this year in the S&P.
I see where you're coming from. Also, to mention what you just said Cadillac, and to mention Cadillac.
Okay.
Well, no. I bring that up because you were in a car accident this week, and
Yeah, I
you could
was.
actually use a new car.
I could use a new car. Cadillac, please sponsor us.
Cadillac.
I will do this recording from my Cadillac if you give me one. I could 5 grand, 5 grand Cadillac, beaten down. I'll take it.
Any sponsors? Look, we are willing to propagandize our 12 viewers.
We will, yeah, it'll be great. We'll dangle like watches in front of them and hypnotize them.
Yeah.
You will buy Pampers diapers, even though
Yeah,
you don't have kids.
we'll do product placements like, "Oh, I'm thirsty."
Oh, my Walmart brand
So refreshing.
water,
Yeah. That's
bottle
like
of water,
store. Yeah, what I look like? Oh,
microplastics included.
always. Um, so back to the meat and potatoes. Funny enough, I'm a vegetarian. So back to the potatoes. Um, I mean, we just have to wait and see. I'm a contrarian. Like I said before, it doesn't mean I'm not going to buy a SPY, but I see where you're coming from. Um, so moving on from SPY, I think, you know, we address the 400-pound elephant. Uh, Meta.
Meta's earnings are coming up this week.
Let's talk about that. Meta has their earnings. When do they have their earnings? The 28th, I believe.
The 28th. Yeah, that is
28th, yeah.
correct.
Yeah,
I'm
so
kind of getting excited for it too.
well, okay, here's here's the thing. Alex and I last Facebook earnings.
Don't talk about that. Don't talk about
Uh,
that.
well, here's the thing.
Let's say this.
Yeah,
Last Meta earnings, Brendan and I were completely right on what would happen in
right.
terms of they would beat and beat, and they would have good forward guidance.
But what matters
The
most in our job?
What matters most is whether the price went up or down, and the price in
And
fact went down.
we lost money. We're not going to share
Perhaps
how much money we lost.
it was not fun.
it was yeah. I mean, it was enough for me to be looking at Alex right now talking about Facebook earnings, like, are we gonna do this again? But I think is something to be said here. Um, there's always something to be said. The only difference between a good idea and a bad idea is how it ends. Uh,
That's what they say in the Marine Corps. The only difference between courage and stupidity is whether it works out or not.
yeah. I mean,
So,
yeah, so maybe in a future episode, you'll find out if we're courageous or stupid. Um,
a
but
little
I
bit of
just
both, I
I
think.
just feel yeah, I just feel like you can be both. So
We're,
Facebook
we're courageously stupid, I think.
or stupidly courageous,
Stupidly courageous. One of the two.
working hard or hardly working. I hope that these earnings are working hard, and I think that with some cuts to their reality lab, I think I think Facebook is poised to make some changes here. Um,
Well, here, let me paint the picture for everybody. So, first of all,
Bob Ross it.
yeah. So Facebook fell from around almost $800, right, toward August.
Yeah.
They fell all the way down to below $600 right after their previous earnings. And then immediately we've been, and primarily why that was because of CapEx guidance. So Meta basically said, hey, that's the whole AI revolution. We're going to spend even more money on it. But the downside is most investors see Meta not as this cloud provider because they're not. They see them as, oh, they're just pouring money into these data servers. Why? Because they want their own LLM. Why do they have their own servers? So there's a lot of questions being asked. Why are we pouring 80, excuse me, 80, I wish it were 80 million, $80 billion per year into AI infrastructure when you're not renting out those servers to other people? It seems like the only people who are getting rewarded for building out AI infrastructure are companies like Oracle or Microsoft or Amazon who say, hey, we have the server, pay us, and essentially you pay rent for computing on our servers. So Meta does not do that, of course. Could they do that? Probably. Will they do that? I haven't heard anything about it, so probably not. But now the big question is, okay, if you're spending $80 billion on these servers, are they going to make us back that money? Is there going to be a multiplier on that money? I mean, I know Dan Ives comes on CNBC all the time and he says there's I think a 4x multiplier in AI. You spend for every dollar you spend on AI, you get three back, I guess, or four back or something like that. We're not seeing that yet with Meta to that extent.
And I think my question for you is with all the upfront costs associated with this,
Right.
do you think there's a point where someone could be more like late to the game and kind of pay for that in terms of premiums? I'm pretty sure now it probably costs um, more money than ever to make a data. I don't. That is not something I've read. That's not something I know as fact. Uh,
I would assume that's the case
I,
because of everybody's fighting over land, everybody's fighting over energy and
yes,
access to those we'll call them power plants.
yeah,
Basically they want to be on a grid that can handle their data center.
yeah.
So I
So
agree. Yeah, totally.
I do think that um, you know, and what I think about is Facebook's first push to VR. And there they're saying, "Hey, well, we're first." Right, with the Oculus acquisition and the creation of Mr. Lucky. But
Yeah.
then
The
uh,
metaverse.
the metaverse,
Yeah.
buy land in the metaverse. But with that, they're definitely not first here, right? So do you
In
think,
anything. Yeah.
yeah, so do you think with what they have already, just in terms of their services and their assets, uh, is there something to be said about there not being as much value there, with them kind of being late to the game?
Well, I think they're definitely behind the other LLMs, right? That's not really up for debate.
Yeah.
The really interesting thing is Meta AI is and this is coming from a consumer's perspective, not anything that I've read, but this is what I've observed firsthand by using their apps. A lot of it has been image based, which I think is really interesting. So if you take a photo on Instagram, it can say you can click on a button that says clean up with AI and things like that. I think that's really interesting that they're pivoting that way because they're integrating the AI into their family of apps, but that's not the same as being a chat GPT or a Google Gemini, right? Google Gemini or ChatGPT, you're typing in stuff and you're making research reports and all of these other things. Whereas Meta AI, the only time I've really used it is maybe to generate an image, maybe to clean up my image on that I'm going to post on Instagram, which generally to be completely honest with you, I have not used that, but I'm also not. I
They are
don't
the
think
Instagram
I'm the
poster.
I don't think I'm the normal person on Instagram either. So I post every like 6 months. So I'm not an influencer or anything. But so to get to the crux of the question, I think there's a point to be made about having access to your own servers, having your own servers. Because yes, it is extremely expensive, but the upside is you can do whatever you want whenever you want. You get
Mhm.
to, and you're not at the whim of supply and demand of whoever wants to buy, you know, buy server access from AWS or Microsoft or Oracle. Now, a good question is, okay, yeah, sure, they get 24/7 access. Yeah, sure, they get to do whatever they want whenever they want. But is the true question is the cost, is the investment going to be offset by the potential revenue? Now, I honestly don't know. To be completely honest, I have no idea. But I think a few things, right? Number one, Mark Zuckerberg is a smart guy. I think
Uh,
he knows what he's doing. He
mhm.
is surrounded by extremely intelligent people. He has essentially created the
Yeah.
the dream fantasy AI team
Yeah.
at Meta. He's paying
The
people.
Avengers. He
Isn't
assembled the
there?
Avengers.
Yeah, the Avengers of AI.
Yeah.
I know Alexander Wong works there now.
Yeah.
Isn't he getting paid like $1 billion a year or something like that? Something insane.
They were giving out packet. I mean, like they were just giving crazy packages, $1 billion, like, work for us. You know, they were basically giving away whatever they wanted. Uh,
So I can't tell you whether this is all a super good thing or a super bad thing. I think what is a super bad thing is if this goes on forever and we don't see anything play out. And I think that's what investors are worried about right now. Now, what we are seeing is the fact that AI is drastically helping the acceleration of their ad business,
yeah.
which is the core business of Meta.
Yeah.
That's a good thing. That's a really good thing. So I like seeing that. The other thing is they have a ton of free cash flow. So if I look right here, I'm on their sheet right now. They're trailing 12 months free cash flow is still 44.84 billion.
Yeah.
So dude, they can afford it.
Yeah.
You know what I mean? So so here's the real question for me.
Mm.
Do I think that the AI investment by Meta, do I think that's going to pay off? Yes, absolutely. I think that if they weren't doing this, I would not be in the stock at all. I would not have a position at all. I That's the reason why I don't like Apple stock right now is because they've kind of fallen by the wayside. They're just agreeing to use Google Gemini on their phones. That's wonderful,
Yeah.
but at the same time, hey, there's a possibility, there's a very real possibility, by the way, that Apple could get left behind in the next 10 years because they're not hopping on this bandwagon of investing in this new frontier of technology.
Yeah. I mean,
Now, yeah.
no, 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 no. I was just gonna agree and say like they are, they have like their little things like, you could touch up your photos, right? I believe Apple partnered with ChatGPT, right, for the rollout.
No, they switched to Gemini.
Oh, they
I'm
did.
like, I think it was a very new thing,
Oh my
Apple
God.
Gemini agreement. This is a
Oh.
very new development. This was January 12th.
Whoa, Apple put
Yeah.
Google's Gemini to run AI-powered Siri coming this
Yes.
year. Wow.
Yes, isn't that insane?
Wow.
So Google is winning on a lot of fronts here.
What we don't talk, I mean, this is only our second episode, but could we talk about Google? Oh my God, $327. Ooh.
Yeah, it's insane.
For for anybody watching, this is the face of a man who sold long before $300 a share. Um,
I have a small position in Google, but it was not one of my biggest bets for last year, that's for sure.
um,
It wasn't a
uh,
good, I mean, Google at a 12 PE is kind of a smack in the face to say, hey, you should probably buy me. But I don't know. I wasn't entirely sold. I'm still not entirely sold on the growth story of Google. I think they're going to have a little bit of a boom, a little bit of a bust cycle, and well, we'll see. But anyway, back to Meta. So now, what does this all mean? Number one, I think since the last earnings report, Meta has recognized investors' concerns over how much they're spending on R&D, on infrastructure build out, and all of that. What did they do? They did layoffs, and um, they started shifting capital away from what was it? Their wearables and their metaverse investment. Oh,
yeah,
their
they,
reality labs. Reality labs.
they rotated out of Reality Labs, but they
Now,
did that through.
is that going to be shifted back to the investor? Absolutely not. I really don't think so. I think that money is going to go straight into the AI build out. But what's good about this is they're saying, hey, it's not like we have unlimited money. It's not like we have our investors have unlimited patience for this to start panning out. We need to somehow cut the amount that we're spending on something
Uh,
appreciable.
uh, for anybody that doesn't know what Alex and I are talking about, Reality Labs. So actually, 10 hours today, I'm seeing a new post, hundreds set to be laid off from Meta's Reality Labs. I don't know how new that is. Um, I don't know if that's in addition or if they're late to reporting. It says here, this is a USA Today, so it's the first thing that popped up. But California's WARN notice revealed that the company intended to permanently lay off 272 employees by March 20th, 2026. The company will specifically cut ties with 53 employees at its Playa Vista location in Los Angeles County and 219 employees at its Burlingame location in San Mateo. I wonder what those
Wow.
locations are doing. Um, Let me see.
Well, we
Meta.
did read earlier that they were cutting things from, I think they had game studios that
Yeah,
were creating games and also stuff focused on VR,
yeah,
specifically the headsets.
yeah, yeah.
But
Yep.
and Brendan, this is another catalyst for Meta that I haven't even mentioned yet. Their AI glasses.
Oh yeah, those have been popping
Do
off.
you know what Meta is really winning at? And this is from a consumer's perspective again, right? I used to live in Palo Alto, California. I went to grad school at Stanford. But you know what I saw everywhere that I went is Meta glasses. You know when I go on Instagram and I scroll on Instagram Reels, I see a ton of
Of
those
people.
videos
Yeah,
recording with their Meta glasses.
and the
A
Oakleys
ton
too.
of people.
Yeah,
A
that's a
ton of
big.
people.
Yeah, and I mean, they dominate that space. I remember, I don't know if you recall years ago. I think it was Google. They had a glasses with a little thing.
Yeah, Google Glass. This was 2014,
Yes,
maybe
yes,
20.
Google Glass.
Yeah, right
Yeah,
around there.
but so this, like and I think the partnership with Ray-Ban and Oakley, two
Oh,
big players in their own spaces, to partner there, and they're bringing the fashion, the trends, whatever, that industry
mhm.
into the wearable technology space. And instead of it being clunky and kind of weird like the Google Glass, it's this conventional everyday Ray-Ban that you see anybody wearing, but it can talk to you, and it has a heads-up display, and I think it's awesome.
What I think that a lot of people miss on that too, Brendan, is the
Sure.
fact that you have you have these wearables, these glasses, which and everybody's saying AI is going to be our assistant. AI is going to be our assistant. I'm sorry. Do I want my assistant to be in my pocket 24/7, or do I just want to be able to say, "Hey Meta, what am I looking at? What is this? Hey, get me a map to this place. Help me walk to this place, navigate this street," right? That's a true AI assistant. And I think that the fact that Meta is making so much progress in that area is outstanding. And their Meta glasses are being sold out everywhere. Meta
Yeah,
glasses are hard to get. People love them. Meta said specifically, I read an article on this. Meta is not focusing on their international distribution of these Meta glasses because they're focusing on the market here in the US because the demand is so high.
yeah.
That is saying something. And so when you have a product like that, which is new, which is integrating AI, the AI that they're building from these data centers,
Mm,
I'm not saying that it's going to be a giant catalyst for Meta's growth
mm.
within the next year. But I think within the next 5 to 10, it's a real possibility, especially if these don't become a fad and they become actually useful from the day to day. If you think about the iPhone, right? Why did that blow up? Because it was useful, because it was sleek, it was stylish, and there was something to it, right? There's something more than just, oh, these are a cute pair of glasses. Or I'm sorry, a cute phone in my hand, right? There was something to it. And I think there's a strong possibility that with the technology that's integrated into these glasses, there could be something to this as well, where everybody on the corner has their Meta glasses, is using that as their AI assistant. You no longer have to pull your phone out, or you don't have to use your phone to drive. Think about it. What if you could have like a map in your glasses as you, maybe that's dangerous. I have no idea. I'm spitballing here, but you get my point. These help you drive from place to place, and there's no need to pull out your phone and get a ticket because everything's right here.
I see where you're coming. Look, I am no expert in anything.
Mm-hmm.
Um, but I'll push back in some areas here. I think that with iPhone, it's interesting because they captured the market. It's a very expensive device. But I think people were able to argue for necessity purposes, right? It's a phone, right? It's a phone that goes on the
Right.
internet, blah blah blah. Like at its core, right? Originally, with with wearable tech, I do think that the onboarding is probably more difficult just because there is the use cause is very limited. For people who are making videos and recording and stuff like that, primarily, right? Because we're still at a point in time where, like, I feel like people don't trust AI enough, or they shouldn't, where they're just asking it a question and just like going through with it. Like, I don't know. I mean, using Gemini, using ChatGPT, it's messed up enough for me to say, I don't know if I would just use an AI like map on my glasses, walk into a river.
Mm-hmm.
No, but
Yeah.
but I think so for the phone, there's that use case. But for the glasses, I mean, you have a $400 pair of glasses. I mean, I'm a glasses wearer, and I know this is anecdotal, but some people like thin frames, right? And like, I don't know how you would
Yeah.
integrate that technology on something like this, right? So I think that the wearable, before we get to wearable AI that people are
Mm-hmm.
trusting to just like plug into during the day, I think we need to make our desktop and like just mobile user interface for AI better in terms of reliability.
Mm-hmm.
And it not being some sort of, I've said this word so many times today, some feedback loop, you know? Um,
Yeah.
but like we're in an age where people are having like AI psychosis, you know? You want those people to have the wearable talking to them all the time? Like
Yeah.
we need, I don't know. That's just my opinion.
But
What's
don't
your
you
thought?
think just looking at the
No, I
demand for the
don't.
glasses, the fact that these glasses sold out in 2 days, in 48 hours in the US, as early adopters essentially struggled to get all of these glasses off the shelves.
Is that ongoing though?
That was January of last year. I can here, let me send you this article too.
I
Oh,
mean,
I need to
I'm gonna
allow
say an
ads real quick.
anecdotal thing right now. I can go to Target or Walmart anywhere near me and pick them up.
So let me share this with you.
Anecdotal, I know. Okay, let's see. What is this? Oh,
Okay. So Meta delays global rollout of Ray-Ban display glasses on strong US demand supply squeeze. So this is January 6th, 2026. Don't make a joke about that. But here's the deal. So on Tuesday, Meta decided to pause an international expansion of its Ray-Ban display glasses due to short supply and strong demand in the United States. I mean that sentence sums up the entire article.
oh, okay. Uh,
It needs more glasses in the US to satisfy the demand. That's literally all you need to hear. Um, you hear that with Nvidia, the stock goes up 20%. You hear that with Micron, stock goes up 50%, right? But you're hearing this with Meta, and we're down, I mean, how much over the course of the last year? 15%, something like that? Or are
sure.
they flat? Something along those lines. You get my point though.
Yeah, I'm looking at them right now.
Now Meta to be fair, Meta wearables are not a sizable portion of the actual revenue of Meta.
Well, yeah, of
But
course.
my argument is that it could be.
And I'm not disagreeing with that. Like, even though I'm pushing back, I'm just
Yeah,
I'm because I do think it's cool. I do want a pair. I mean, I think it's cool, but in terms of use case, it's like my iPad. I love my iPad. I love it. But if somebody,
yeah,
gun to my head was like, Brendan, you need to, like, I don't know why they would put the gun in my head. I don't really think you need that for this. But I don't need this. I don't need
yeah.
I don't need the iPad, right?
But again, Brendan, here's the thing though. You're talking. We're having a conversation with two of the most frugal men in America.
Okay, that's fair.
You know what I'm saying? We're talking about the average consumer who looks at something, says "ooh, shiny," and buys it. How do you make the shiniest thing and most useful thing? Right? So you have a stylish pair of glasses that are integrated with AI and
And
they're
legacy
cool,
brands.
and legacy brands and they're cool.
I'm sold.
Like
I
you're
honestly,
yeah,
that's all you have to
you know
tell
what
me.
I'm saying?
Yeah, no, no, no. Hey, when you're right, you're right. When you're right, you're right. I agree with that.
So I'm really interested to see how this is going to play out over the next 5 years. But to
Okay.
transition a little bit now, specifically to these earnings, what am I expecting? Well, right now, they're according to the options market, right? There's a prediction of a 6 to 7% swing one way or the other. Pretty heavy. Granted, they fell what 10,
Did you do that
15%
on
after
purpose?
earnings. What is
Did
is
you
it
do that
six
on
point?
purpose?
Did I say 6.7?
Yeah.
Oh no. I didn't even think about that. With a 6.7% implied swing either way on Meta, we've got to pay attention to a few things within the earnings. Number one, are they going to reaccelerate or continue to accelerate their capex? So if they say we're going to spend $120 billion next year, that's going to be really scary for investors. And I would expect a very negative swing on Meta shares. The other thing is, of course, guidance. I mean, that's always the main concern with earnings. But honestly, it seems like Meta's growing at a very consistent pace. It seems like their earnings have been very predictable and traditionally that they beat and raise a little bit. So I'm not terribly scared on that. And I think the core business of Meta is extremely strong. And I think they have a lot of room for growth in different segments of the market aside from their core ad revenue business. So mainly what I'm expecting is something positive, so long as Meta reels in their spending just a little bit. I don't think they need to do it a lot. I think they just need to do it enough to put their investors at ease, essentially. And if investors can take a deep breath and say, okay, we can handle $70 billion or maybe even $80 billion a year, building out this revenue, or maybe even putting forth a plan to say, hey, we're going to spend $80 billion next year, but then $40 billion the year after that. Something along those lines that sort of paints a picture of this isn't going to go on forever. All of this money isn't just going to go into all of this build out forever and ever and ever. And our margins are going to get compressed and our earnings are going to suffer because of it. There needs to be something to show people, hey, relax, this is temporary. But at the same time, here's the thing: Meta is a hyperscaler. If Meta says that they're not going to spend a ton on AI in 2027 or 2028, what type of effect is that going to have on Nvidia's stock price? What are the
The
expectations on
ripple.
OpenAI?
Yeah.
There's a ripple effect in that. What is AWS going to do?
Yeah.
What is Microsoft going to do? What is Oracle going to do? It creates a lot of uncertainty. So it's almost like the only true way to win is to, I think, stay flat instead of grow a ton. Because if they crash and say we're going to drop our capex by $20 billion next year, that's scary for the rest of the market.
And so it's kind of this weird thing where it's almost like forced participation by a product of being such a leader in the space. Um, and and I guess, I think to your point, it's like investors are kind of gonna have to stomach this period of innovation and growth and all these R&D expenditures. I'd also like to add, because I don't know if we already if we chatted about it about for their earnings yet, but remember last earnings, I believe it was their last earnings, they had that tax expenditure.
Oh yeah, it was the one-time tax expenditure. I want to say,
15
was it
billion?
Brazil?
No,
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 no.
no. It was
It was
the
from the Big Beautiful
it,
Bill. It
big
was
bit
from
of
the.
yeah, big
I
bit
think Brazil was
of
Netflix.
yeah.
Netflix had a one-time tax expenditure from Brazil. Yeah, because that's the whole reason that they missed on their EPS last earnings, which was
Yeah,
also a
because
concern for investors, I assume.
yeah, it really impacted their revenue.
Yeah.
Yeah, so I mean, I believe last time they said that it was going to have some uh, in the future there would be tax savings.
Mm-hmm.
So I wonder what we're going to see this quarter because if we compare it to last quarter, right, we're going to see a significant, at least, um, a percentage return from that tax bill
Right.
coming back to us.
Yeah. So, what are your thoughts on Meta earnings? Are you optimistic, or do you think that this cycle of capex growth is going to continue and investors are just going to get more and more antsy? Or do you think Meta has sort of reined themselves in? I mean, it feels like they have, at least from headlines that we've seen over the past 3 months. What are you predicting?
I think my impression, I think, I'm always bullish for Meta. Um, I think they are a leader in just in when I say industry, we say tech, but I think that has so many applications. So in terms of Meta,
Yeah.
Meta can do anything, right? They're at that point. So for this quarter, I think with all the concerns and whatnot, I think given that last quarter we paid that tax, but I believe they still did well. Um,
Hmm. Without the tax, they would have beat both EPS and revenue.
yeah, so I mean, I honestly wouldn't be surprised if we saw a return out of the sixes if we started to
Hmm.
trend upward out of there. But I do think that there are other concerns in terms of guidance, right? I don't, what was their forward guidance last time? Oh yeah,
Q4 20. Yeah.
so t- so this is from Meta Investor Relations. So about what we were saying earlier, on their website it says we expect a significant reduction in our U.S. federal cash tax payments for the remainder of 2025 and future years due to the implementation of the One Big Beautiful Bill Act. However, the implementation also led to the recognition of a valuation allowance against our U.S. federal deferred tax assets, reflecting the impact of the U.S. corporate alternative minimum tax. As a result, the third quarter 2025 provision for income taxes includes a one-time non-cash income tax charge of 15.93 billion. Excluding this one-time tax charge, our third quarter 2025 effective tax rate would have decreased by 73 percentage points to 14%.
Wow.
And that's compared to the effective rate of 87%.
Wow.
So their without this, their net income would have increased from would have increased to 18.6 billion compared to 2.7 billion, and
Hmm.
their diluted earnings per share would have increased by $6.20 to $7.25 compared to the diluted earnings per share of $1.05. So
Yeah.
I
Wow.
I think I think Meta's a good company. I do think that investors are going to have to stomach a little bit of there could be treachery, especially I think innovation is sort of like price discovery, especially when you're like
Hmm.
among the
Oh,
first,
for sure.
right? You're out there. You're in the
But you know
ether.
what I really like, Brendan?
Uh,
I like price discovery when we're at a 22 forward PE.
22 forward PE. I mean, you and I are both bullish. We know what we're doing for Netflix earnings.
Oh yeah, for Meta. Yeah,
Not investing advice, like non-investing advice. No, we're not giving anyone advice.
this is what we're doing with our portfolios, of course.
Was yeah, do what you want. Like take all your money and spend it on the dumbest thing ever.
If you want.
If you want is the qualifier.
It's
I didn't tell you to
not our
do.
advice.
That's not my advice. I'm just
Smartest
saying
thing or dumbest thing, we don't care. All right.
if you
Anyway,
want
go
to do
on.
that. Anyway, we're moving on. But so yes, I like Netflix. Oh my God. I'm
You're
obsessed.
obsessed with Netflix, man.
Dude, it's because I have it in front on three screens in front of me.
Oh my gosh.
No, but Facebook.
You're happy?
Are you happy? You seem happy.
1 year price target. Where do you think it's gonna be at?
Oh man, yeah, I love these questions. I love a price target question. It depends. And I think I have to qualify that by saying there are so many externalities at play here. And I know that's annoying to you.
Yeah.
But it's
What are your assumptions? Give me a price target with assumptions.
okay. All right. Assuming a neutral state of affairs where um the net effect of there's no global conflict. Imagine we had
Hmm.
world peace. No.
Okay.
No, no, no. No. No, okay, so my oh my God. My 1 year price target, assuming that everything is fine, in the world, they continue to grow, revenue grows, and it depends on their guidance. It really depends on their guidance. They talk about infrastructure capacity here in their outlook for the following quarters. So I think with AI, I think we can expect to see that it's going to get expensive for them. But as long as their revenue can match up with the pace of how much they're spending, right? It's a core economic principle. How many dollars are you spending to make a dollar? And I think as we see these expenditures, as we see these R&D, I think investors will be fine. So insofar as there is something, it doesn't even need to be profitable, but you need to see consistent growth in existing revenue streams, or you need to see the creation of new revenue streams. I know
Right.
you said earlier that, this is really going to help ads, right? Because this is their bread and butter. And I think
Right.
in that capacity, yes, but I also do think there is a fine line on the user end. I do, with all these things, as we discussed privately, I always think the applications are extend further than user applications, right? I think I always
Hmm.
go to healthcare and government, and I always go through either sifting through data, but imagine with so for Google, they have like Sora, right? But to what you said with Meta and how they're integrating photos and they're kind of going down that avenue,
Right.
I I imagine that on the legal end, for example, like for discovery, there's so many documents, there's so many applications there, right? But
Hmm.
imagine, if you have a lot of pictures, going through like you finding patterns in photo evidence, right?
Hmm.
Or using AI to enhance existing evidence, existing things that we have, um, so that we can, do whatever. So I think those applications for these companies are can always be extended to either military or healthcare. I mean, just imagine that, right? Where um, Meta's kind of framework for its AI integration with photos. Uh,
Hmm.
Imagine going through pictures of diseases or pictures of cells, right? We know what cancer, for example, looks like, and going through all of this data that we've compiled from all these years, and maybe it can help for like early detection and think like, the possibilities are endless. And I think from an investor perspective, it's exciting, right? Because I know it's not just consumer side. I know some people make stupid pictures. I don't know, maybe they'll put a hat on or a
Right.
jacket, right? They'll make a picture. But it's so much more than that. And I think that's where the real value is. You know, you make investors happy by, getting some money now from people, but the application is so much more than that. Why are you smiling? Why are you smirking?
One price, January 27. What is it?
Oh my God. Yeah, I went on a whole tangent. One price. One love.
Assuming everything you just said, go on.
Oh yeah, yeah. Assuming that has already happened and will be in the quarterly report.
No, 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 no.
Yeah, yeah. Okay, so assuming this,
Assuming it's going well and no global conflicts.
dude, why
Let's
you
go
always
on.
want a number? Here, this is gonna be a
Give
theme.
me a number. Give me a
It's
number.
gonna
I
be a
want a
theme on
number.
this show. I will never give you a number. It's gonna be a theme. I will never give you a number, and
All
I'm
right,
gonna
fine.
turn the
I'll
most
tell him
important
my
question.
number.
What is the number?
I'm telling my number.
Let's hear
I
it.
think we break 800 by January of 26 or January of 27. Excuse me. It's already January 26.
It's like, what?
We break 800, right? And we're probably at a 26, 27 PE.
You heard it here, folks.
Wherever that ends us. So I think we're at a forward of 22. I think we're going to go up about 10-20%. That's going to bring us already close to 800, and then there's going to be organic revenue growth on top of that. So we might be closer to 850, 900. But I expect probably 800 just given the sentiment of the stock right now. Now, what do I assume in that? Number one, I think that Meta has to continue growing 18 to 22% a year, somewhere in that range. Uh, I think they have to continue to do well in their Meta wearables, even though that it's not a giant driver of revenue. I don't think it's essential, but I think it plays into the growth story. And lastly, I think that Meta has to rein in its capex in some capacity. Investors can't get there's a little bit of fatigue with investors right now, seeing the capex just go up and up and up every single year. There needs to be a plan, or alternatively, there needs to be an appreciable result outside of the ad revenue business. If Meta came to their investors and said, "Hey, we're gonna make these data centers and we're gonna allow people to rent them out, like where AWS or Google," boom. I
Boom.
think there would be an instant premium on the stock, and 800 would be out the window. I think we'd be looking at 900 or 1,000. So
Yeah,
that's me.
900 or 1,000
But
lawsuits.
yeah, maybe. But I think $800 is pretty reasonable for this time next year.
Well, from your lips to the candlesticks. Uh, so you've heard it here.
Fair to fair, folks. All right, dude. Good
All right,
good conversation. I think this is good.
nice one. All right,
All right, I'll see you.
I'll see you.